You could learn a lot from going on vacation, especially when it comes to investments and investment opportunities. I look at the places you're going to. Are they crowded? What hotels are doing well? Are people buying a lot of stuff? Not just the crowds. Are they holding lots of bags? What are they buying? Are there long lines at these stores, at restaurants? Is everything more expensive compared to your last vacation? And that's just looking at the macro view. Everybody says macro and they get bored. That's looking at the macro view. But you can learn a lot from that. And that's like a top-down approach. And bottoms up is like looking for individual ideas and stuff like that, but even looking for stock ideas. And when you're going on vacation or you're going away, for me, again, I'm spending time with my family and stuff. I'm not, taking time away, but these are things that I'm noticing. And by noticing some of this stuff, it leads to lots of investment insights and opportunities. You're looking at Universal, it's Comcast, right? You look at Disney, how they're doing. You're looking at the hotels, Marriott, Hilton, Chipotle, Buffalo Wild Wings, its food place, how they doing. Delta, American Airlines, whoever you fly with. But even, whoever you fly, are the airports crowded? Are they jammed? How much are you paying for parking there? I mean, parking's been jacked up tremendously at all these places. Even when we parked Volcano Bay, I think it was like, what was it, $25, $26 or something to park at Volcano Bay? Holy cow. Imagine getting a cabana and then tickets. It's what, $1,500 right off the bat without ordering food? And you don't get the food for free with the cabana. Holy shit. Just to jump in a couple pools and go down a couple slides. But people are paying it. They're paying it. But how much did you pay for those airline tickets? And you can go even further where, you're seeing strong demand and packed flights. What does that mean? It means that airlines are going to have to increase their fleet. They're going to have to buy more planes. That's Boeing. And if that happens, there's hundreds of companies that supply Boeing. So a lot of these, when I visit, again, go to that Everett, Washington plant. It'll be an amazing experience. The whole assembly line for airplanes, one of the biggest buildings, if not, I think it's the biggest plant in the world. It's huge. You got like a fire department in there, and you can't imagine how big it is. You can look at it online. It's amazing. It's absolutely amazing. I mean, you could lose your kid for like 2 weeks in there. That's how big it is. It's unbelievable. And you just see all the parts makers, how they make the planes. But look at all the supplies of Boeing. And you got Honeywell, GE, Spirit Aerosystems. You got Eaton, Crane, Raytheon, AK Steel. Ducommun is one that very few people heard of. We did very well with that in a pick in our CVO newsletter a while ago. Gentex, B Aerospace. I mean, you can keep going and going and going. But that's how I look at investing. That's how I find opportunities. Again, of course, I'm enjoying my family on vacation and it's cool, but just noticing, that's the way I think now. That's just how I'm programmed. I analyze everything. But for me, I'm always, always, always looking for opportunities. And the best way to find new ideas and find them quicker than anybody else is by just opening up your eyes and noticing them, because that's real-time data. That's real-time data. I mean, now we're looking at jobs reports, consumer prices, GDP figures. All that's lagging data. A lot of that shit gets revised 2 to 3 times over the next 3 months, next 2 months. That's lagging data. We know inflation was over 5% easily, and CPI was going to be, through the roof. And economists are saying, well, the core was, perfectly in line, up, 0.3%, whatever it was. But you know it, you see it because you're paying for all this shit, right? So you see it before everybody else. But the trends that I brought you, going to Consumer Electronics Show, speaking not just to the CEOs, because every CEO is going to tell you how great their company is, right? They're not going to talk bad about that company, which is normal. But you're talking to the employees, you're talking to these people at booths, you're talking to everyone about different trends. That's how you find the best ideas, and you find them early. Because once you find them, then you start digging, and then you go to Google, and you start just reading a bunch of stories, and then you could talk to different people. And believe me, it's not that hard to talk to people. People love talking about themselves, talking about their job. Call them. I mean, for me, with this podcast, I get to interview them, but just that's how you find new ideas, by going away and looking at what's working. And I can tell you, going on this trip, holy cow, I've never seen it so crowded in terms of restaurants, and we're not even seeing international travel yet. I don't know how crowded the Disney parks were. I know that a lot of people had, instead of going to Disney, and at Disney parks went to Universal because they just don't want to wear masks, and I get that 90-degree weather. But Universal was packed, Volcano Bay was packed, the restaurants were packed, and everybody was paying for VIP services to get extra things. They're all carrying bags, they're all buying stuff. And people have a lot of money, and they're spending it, which is going to be very, very good for profits, which we're seeing right now. I mean, earnings are absolutely through the roof. I mean, I taped this on our YouTube channel, and I'll bring something up right now because FactSet, I tell you, this is the best report ever, the FactSet report. So you look at the FactSet report, it's for free. Just go FactSet earnings PDF and Google, and it comes up. And this one's like a few days old. But they say 87% of S&P 500 earnings have reported, 87% of 500 companies have reported positive earnings per share surprise. That's the highest that have ever been tracked, right? So they're blowing out the estimates. Okay, this isn't because of COVID where it has an easy comparison. This is because the analysts, their estimates are too conservative. And they're probably going to be too conservative next quarter as well because we're seeing earnings go through the roof. The S&P 500 is trading at 21 times forward earnings. Is that expensive? Absolutely not. We know interest rates are going to stay low, right? It's a political organization, no matter what side you're on. It's not independent, so they're not going to raise rates going into midterm elections. No way. Are you crazy? No way. No way is that going to happen. That's why they're using the word transitory. So we have low interest rates. We got another $3.5 trillion coming in infrastructure. People have more money than ever. Sure, we're talking about record debt. Well, talk about record household wealth. Talk about both sides. But man, you see it. You see people, you see your neighbors buying new cars. They're probably, building extension on their houses. People have a lot of money right now because it's been given away. Anyone who owns assets, those assets have inflated in prices because, inflation's through the roof. You could buy a used car now and make, not a used car, but even a new car and make money off of it. You just lose what, like 15% of its value when you drove out? Hold for a couple of months. You'll probably get more than what you paid. It's insane. Look at home prices. Continue to go higher and higher and higher. And more importantly, which I'm showing here, look at earnings. And we look at earnings here, we're going to see about $210 in earnings for this year, for 2021. But with that in perspective, pre-COVID, which are record earnings, it was at 180. So we're 15% high. It went from 180 to about 140 during COVID. Everybody cut back, and we saw that, and it was crazy. So now we have earnings that are 15% higher, all-time record. We have home prices at record highs. We have household wealth, right? More people are rich than ever, record highs. Again, these earnings are showing GDP has bounced back. Everything has bounced back, everything. Yet the Fed won't take its foot off the pedal, which is fucking crazy. It's crazy. We're back. Our economy's back. Our earnings are gonna be blowing out estimates right now. You see it from all these companies, at least from most of them. 87% reported positive surprises. But 21 times forward earnings, that's not expensive when you have zero interest rates and you're flooding the money with cash. No way. I mean, it's a perfect environment for stocks. That's the way it is right now.